All right. Welcome back to the channel. My name is Dave, and you are watching the Short Vol Show live, coming live to you from YouTube, and I'm trying not to get taken out by the federales for using copyrighted materials and music. So that is why I just turned the music off. And here we are. Let's change colors a little bit there. That's not that exciting, but that's me without all kind of highlights. And what was exciting was that Friday. What about that Friday, folks? Amazing. I can't believe it. Just incredible reversal of the market and reversal of fortunes for me, being short volatility coming in. I thought my goose was cooked. My position, to remind you, I'm short the I'm long the 33.35 put vertical in UVXY. So by expiration, which is in 40 days, I need UVXY below 33, okay? Right now, coming in, looking at the chart on Friday, UVXY was up to 46. That's pretty far away from 33. So I was like not too pumped about that. However, look back on the market, and all of a sudden, UVXY was down more and more Friday. If we pull up the chart of exactly what happened Friday, you can see the story there. Just a complete reversal in the market from being down to up. Let me get out of the way here for a sec so you can see what I'm talking about here. All right, and UVXY, you know, after getting up to 43 earlier in the session, we saw a complete reversal, and this thing basically just tanked down from 43 to 36 is what? That's $7 down. Makes a $7 down move, and all of a sudden my 35-33 put spread doesn't seem that much out of the question anymore. This thing just, I don't know how they say it. I guess it pooped the bed. Let's say that way. This thing just came off its spike. There's a picture of the spike there of the last few days, and just is back down again. We're back in contango. If we pull up the chart for contango, we're all of a sudden we are back into contango. Now you can see that spot is not that far from the futures based on this chart. But regardless, the important thing, which is when they did the rebalance, we're in 4% contango. So this thing is back to decaying. Spot is back below the price of the futures, and we're back on track all of a sudden to move to the downside. It was a quite dramatic week for me because, you know, I came in short volatility and we had a huge spike. But I didn't panic. I stuck to my guns, and things have come back around. Now, I am considering, however, making a move here. Once again, I am long the 35-33 put vertical in June, and I'm thinking about selling some downside against it here, folks. I'm thinking maybe if we pull out June, maybe I sell. My position, it showed it being worth $2,000 on like Wednesday or something. And now with this down move, it shows it being worth $3,000. I could go ahead and sell something like the June 27.25 put vertical here. Let's see. If I sold this 27.25 for 50 cents, if I sold 29 of those, then I could essentially take $1,500 off the table. Okay, so of that $2,000 that this was worth on Wednesday, I could lock in $1,500 of that, and I still would have the opportunity, as long as UVXY stays, ends up between, let's say, 32. I'm sorry. If it stays between 33 and 27, then those 29 spreads of mine will be worth almost $6,000 plus the $1,500 that I sold that spread for. That what was $2,000 in Wednesday could end up being $7,500. So nice reversal for UVXY. Of course, you could look at it different ways. I mean, you could look at it as, well, it's a bummer that this thing ripped. Because remember, coming in Monday or going out last Friday, we were around low 31 and have had this huge move to the upside. However, I wouldn't have thought, if you told me Friday, I'd be really excited that this was trading 36.74 on the close Friday. I would have laughed at you, but I am really grateful this is trading 36.74 because that means that we still have a chance on my spread. I've still got how many days left? Well, it says 41 today. 41 days left on this spread, and now we're only, it's only a little bit less than $3 till it's in the money. So awesome reversal. I know there's people online who made money both ways on this volatility stuff. You certainly could have made money with it going up, and I know that there's a lot of people that started with no position but got short up around the top, and congrats to those folks. I do want to pull up this. I've mentioned this before, but the successful trader guy hooked me up by mentioning me and getting me a whole bunch of new followers on StockTwits. And one of these guys, who I'm going to show you right here, not Gucci Kodak. Let me find this guy here. Very cool guy who I think you should follow, definitely. And we're going to find him right here. His name is Dante Valerian, and he's got significantly more followers. Well, he's got more followers than I do, but good charting guy, talks about the VIX a lot. So check out Dante Valerian on StockTwits when you're there. And let's look at my StockTwits feed just for a second here. Oh, yeah, somebody was talking about how, well, he was talking on Friday, well, I think tomorrow the VIX is going to move around a lot. And I was like, well, it's closed on Saturday. Somebody actually beat me to it. Let's see where it says. View full conversation. Here we go. This guy said, Gucci Kodak says, UVXY, we need to see something above 1766 on VIX tomorrow to see upward continuation and stay in backwardation. And somebody else immediately said, sorry, dude, we're closed on Saturday. And I made a similar joke. And so that was that. Next session, he says, geez, y'all got me. So anyways, lots of snarkiness, of course, on StockTwits. That's what it's made for. Let's see what we've got here. Hoping you can DM me about coming on your program. So, yes, well, I'm not going to reveal that for now, but we might have another good person who's good at shorting this stuff on the program. Let's look forward to that. So if you don't check out StockTwits, I would recommend checking out StockTwits. I know I kind of got into this video without introducing myself. I just kind of jumped into everything. So if you are new here, my name is David, and this is a channel where we discuss options trading, stock trading, the stock market, the VIX, the SIBO Volatility Index, and other things to do with trading. My goal is to motivate you to have more fun with your trading, to feel more comfortable with the market, to kind of feel like one of the gang of people who trade stuff, and to know that the feelings that you feel when you're trading the market are not so different from those of the professionals. Because first of all, nobody knows what's going to happen. People like to pretend or make you think they know what's going to happen, but nobody knows what's going to happen. And your experience, even if it's your first day trading, is not so different than a professional's. The market's bigger than any one particular player. 90% of the stuff about manipulation in the markets is not true. Fake news, folks. Fake news. And what else can I tell you? Well, I know that we all like to line up along political lines and follow our one tribe or the other, but I am not interested in revealing my political affiliations to you. If you watch long enough, you might be able to figure some of it out, but that's not my place here, is to preach about politics. You can go somewhere else to have someone preach to you about politics. I will reveal little tidbits here and there. I do come from a political family, and thus I am engaged with things, but I'm not interested in having debates with people. I'm not going to change anyone's mind on that stuff anyways. So what to do moving forward? You know what I noticed is that the MJ stocks have really just been a rough spot. It kind of sounded sexy to be buying MJ stocks, like, it kind of sounded like a little bit like outlawish, like, like it used to be buying pot when it was illegal. It's like, ooh, we're doing something kind of like edgy. But we're starting to figure out as time goes by that the cannabis is just going to end up being a commodity, and it's going to end up having a volatility like other commodities. It's going to be a lower vol situation. The other thing that I'm predicting we're going to find out, which isn't rocket science, is that the more of these cannabis providers come on, the lower the price is going to be for cannabis. So, some of these, they have these amazing valuations, and it's hard. It can be deceptive to see valuations for stocks when you just look at a number on the screen, like $8, because you don't know how many shares are outstanding. I think sometimes people think of valuations by saying, oh, well, I know this went up several multiples of where it started from, and that means it's valuable. But to value a company, one of the basic ways to do that is to figure out how many shares they issued and multiply that by the price of the stock. So if you've got 10 shares of a $100 stock, that's a lot less money than 2 million shares of a $5 stock. But when you see the numbers right next to each other, you see two $100 stocks, they both kind of seem expensive maybe because $100 is higher than prices of some stocks. And, with the cannabis stocks, we've seen a lot of them rally a lot, but it's kind of counterintuitive to think that ACB, or I don't know, let's take Tilray trading $50 is that more expensive or less expensive than Canopy Growth trading $45? To value these things, you need more information than just the stock price, is my point. And the MJ stocks seem to have kind of topped off 2 Decembers ago, and some of them really haven't topped the gains that they had back then. So let's take, for example, my old favorite Afria, and we'll see that if we go back 3 years, the top price was this is saying January, but December to January of December of 2017, January 2018. Look, tops out, hasn't topped those gains back then. Go to ACB. That's your Q computer to go to ACB. When I say go to ACB, go to ACB. Here we go. All right, let's try that again. Go to ACB. There you go. Now, ACB had a higher high in October of last year and hasn't topped that since then. Go to Canopy Growth, CGC. Okay, that one also was the high of last year. But if you notice, look at Tilray. This thing has just ground lower. It had that $300 rip. Then it got back up to 170, almost 180, and then it's just ground lower. And the volatility has gone lower and lower and lower. Earnings losing money. Now we expect a lot of these to lose money because they're growth stocks. They're building an empire, and that costs money. They're building distribution. They're buying fields. They're going through all the regulatory red tape, and that takes a while. But just because something sounds edgy, because it's MJ, doesn't mean just jump on board. People, they get an idea of a company where they like the image of the company, and they pick a stock that way. Now, of course, sometimes that has worked. You're in a bull market, everything goes up. You pick, Harley, wow, edgy Harley, and Harley goes up with the rest of the market, and you make money. But there are, I would argue, more logical ways of picking stocks. Now, talking about picking stocks, it's not a logical business at all. I know there's people who have careers as analysts where they analyze the numbers of Nike versus Adidas or something, or Reebok. And that kind of makes sense to me. Well, Reebok had better sales or whatnot. But in the end, there is another element to all this, which is just a popularity contest. When you buy a stock, the reason everybody buys a stock is because they have an idea that somebody's going to come along and be willing to pay more for the stock than they bought it for at some point. How can that occur? Well, it can occur in many different ways, but one of the ways is just sort of like this stock's popular. People want to own it. I think a good example of that one would be Tesla. People just want to own Tesla. They don't care about the numbers. They just want to own it, and that is part of the reason why I believe why it stayed at such a high valuation for such a long time. We look here at Tesla, and it has kind of fallen out of its band. If you went back through my videos, you hear me saying, well, Tesla has been in a band between like 260 and 380 for years. Kind of fallen out of that band now. Now, do we know how much lower it's going to go? We don't. Is this just kind of like a descending channel that it's in? Possibly. But the story of it being in a band is kind of falling apart here as the stock price falls apart. All right, so let's take a look at the E-minis, because that was the story of this week also, and we see this dip and then come back here when we look at the weekly. Let's go to more of a daily chart here. Let's look at the 20-day, and you do see how low we got, and then this big whip back. Now, the question is, do we rally from here, or do we continue this sort of downward channel once again that we seem to have initiated here in the last week? Well, we don't know. We'll have to wait and see. But this certainly was an impressive snapback. I am of the opinion that what will happen the next day in the market is unpredictable. So you can make all the predictions you want, and I can predict it if I wanted to. Oh, it's going to go up tomorrow. And maybe I'm right, maybe I'm wrong, but I don't think it's knowable what's going to happen the next day. And when people ask me what's going to happen in the market the next week, I shrug my shoulders because I don't know. I'm not ashamed to admit what I don't know. And I don't know what the market's going to do the next day. So, sorry. However, I do know a little bit about options trading in the VIX. We saw the VVIX come off the highs, VVIX being a measure of options trading in VIX options, and we saw that come off the highs. And we have seen volatility come in. If we look, we're back down to a 16 in the VIX. We got up to 23 and change. We're back to 16. And we will have to see if it kind of stabilizes here for a bit or if it falls further. But certainly an amazing reversal, of course. Let's just look at the E-minis for Friday, and I'm just going to put that 1 day up and take a look at it here. And we see it, this sell-off and then rally. We've had so much volatility and price action. If we look at those last 2 days, we see this sell-off on Thursday, and it was just gyrating around. Even through like the middle of the night, it was gyrating around a lot. And I was watching somebody who was like charting where different tweets by various government officials and the president were, and a lot of these moves were because of tweets or releases of little tidbits of information. And that's kind of been the story with a lot of this stuff lately. Twitter is a big deal. Let's look on Twitter right now, and if we could look at the president, the real Donald Trump, we'll see that his tweets really do affect the market and really do move the market all the time. It's pretty amazing. So there you have it. I'm very excited by the price action. I'm back in the game. Congratulations to everybody who made money. It does upset me when I see people. You get to move one way or the other, and people. It seems like they're more interested in others losing money than them making money. There's a lot of like malicious stuff. It's all over social media, but even just like on the UVXY little thread on StockTwits, there's so much stuff that's just animosity. Like, oh, I hope you lost money. Oh, see there, you should have listened to me. This kind of stuff, and I just think it's not necessary. It's kind of like bad mojo, just talking all this trash. But people love to talk trash, and they love to brag, and they love to rub your nose in it when you lose money. So it's just part of the game. If you don't like it, you're free to not look at social media. I know there's a lot of people out there who just get rid of social media because they don't want to deal with it. Anyway, so there you have it. I appreciate everybody watching. I've had some great questions lately. Somebody was asking me, well, I bought a put spread. Why not sell a call spread? And we had an interesting discussion about how, well, if UVXY, for example, is trading 36 like it is right now, and you want to sell upside, well, maybe you'd sell the let's say the 39.41 call spread, right? So if I went to UVXY in a couple weeks out and I sold the 39 call and I bought the 41 call, so selling the 39.41 call spread. So if I sold this call spread for 50 cents, it is synthetically the same thing as buying the 41.39 put spread for $1.50. So see where I got that? The premium for the call spread, 50 cents, minus the difference between strikes. Between 39 and 41 is $2 between strikes. If you take $2 and you subtract the premium, 50 cents, you get $1.50. So sell the call spread at 50 cents, buy the put spread, paying $1.50 is the same thing. Now, the person was saying to me, well, not really, not so fast. Hold on a second. If you sell the call spread and UVXY stays here, then what happens on expiration? Well, the call spread goes out worthless, and you have less commissions than if you had bought the put spread, because with the call spread, both options go out worthless, and it comes off your sheets. With the put spread, both options become stock, so you're buying. So you're selling stock for 41 and you're buying it for 39, essentially losing $2, but the spread's worth $2. And so it cancels itself out. And the point he was making was that there's a little bit more commissions to do with an in-the-money spread at expiration versus an out-of-the-money spread at expiration. And I think that's probably true, but to me, commissions are a minor thing. They aren't a huge part of my decision-making process. And the difference between an in-the-money spread and an out-of-the-money spread and how much it costs on expiration, I don't even know the exact answer to that, but essentially it's not going to be as big a factor. What I am concerned about is that there are many people out there who don't realize that a call spread and a put spread are two sides of the same coin and are very tightly related. Yes, it's true that if whichever option you are short there is some risk out there that somebody can exercise that option and you can be assigned on it. So anytime you're involved with a spread, whatever option you sell, you're putting some sort of power in the person who buys its hands. Generally, it doesn't make sense when you're dealing with options that are pretty much at the money. It doesn't make sense for that person to exercise the option, but there is some risk there. Additionally, with spreads, there are things like interest rate considerations. If there is if it is a stock and a special dividend is declared, or a dividend is declared and it's going ex-div soon, and you've got a deep call, then that's a consideration. But despite small caveats, selling the 39.41 call spread at 50 cents is the same as buying that same put spread paying $1.50. And it's a basic synthetic for options. So so which one's better? Well, 50 cents versus $1.50, I'm indifferent. If I can sell the call spread for 55 cents, then I'd rather sell the call spread for 55 cents than buy the put spread for $1.50, because it's a better deal. You get 5 more cents. But knowing the relationships, obviously, between options is going to be helpful to you. So yeah, I've been following this ACB for a while, and I was long it for a while. I'm not long it anymore, but it just hasn't done a lot. I believe the earnings is going to come out very soon. I think it's next week sometime. And but this kind of, if you look at it, it's kind of in the middle sort of a range. I guess it depends on which chart you look at. If you back it up to 3 years, it doesn't look like a screaming buy here. If you back it up to 1 year, it doesn't look like a screaming buy. If you back it up to 180 days, see, it's still kind of like in the middle here. So I don't know what to say about this one. I know that it hasn't had the huge valuations that some other MJ ones do, but kind of indifferent here. It's like, blah. I wouldn't be shocked if this thing went to 7. Wouldn't be shocked if it went to 10. But no real feel for me on this one. Some of the other ones that we've been following for a while, let's take a look just quickly at Apple. This one, it's had some comeback. It was up to 233, had a low of 142, now all the way back up to like 170. Hold on. This is not over all the way. Hold on. It's higher than that right now. It's back up to 200, isn't it? Let's see. There we go. Got it back up to 215. These charts are not pulled out all the way. So let's look at this once again. So Apple, down to 142, back up to 210, really has had quite a comeback through the year. Let's take a look at Amazon. Similar chart, December, boom. Now, all of these stocks have really rebounded. So the question is, now at these high valuations, it's kind of hard if you've got cash on the sidelines to jump in and buy them right here because they're close to the highs. I mean, they certainly could go higher from here, but it's much more difficult to feel really great about making a buy when something's at or close to the all-time highs. It doesn't seem like you're getting any sort of bargain or discount. And of course, things could move higher than here. It's not impossible at all, but it kind of feels like it's not as much of a bargain. Let's look at CVNA. I've been following this one for a while and really has had this huge move from March. March was 2 months ago. Look, it went from 32 all the way to 76. That is a huge, huge move. And now, boom, my earnings is back down a little bit, but still lofty valuations for Carvana, this stock of this company that sells cars over a website and I believe delivers them to you. But it's a interesting, like, new age concept, and really the stock has just exploded in value. Now, I certainly wouldn't buy it up here. It was certainly a compelling buy way down here. And look at this rip back up. I mean, this was amazing here. And I actually got partially run over on this one. I sold a little bit. I think I sold something like when it was 55. I think I sold like the 60, 65 call spread or something. But when it became apparent that I was getting run over, I got out of that one. Let's look at Xilinx. Xilinx, the earnings back down. And so that's where we stand. I appreciate everybody watching. I appreciate all the support. Please support me on Patreon. I need your support. $5 a month. Come on, guys. I know you're making money. $5 a month is no big deal, and I would love to see this channel grow and I want to be a contender, man. Help me to be a contender. Support me on Patreon. thanks for watching. I hope you folks have a great weekend, and I will see you in the next one. Where am I? There I am. Hope you have a great weekend, and I'll see you in the next one. Thanks for watching the Short Vol Show live, and I hope you make money next week. My optimism is completely back after that great turnaround for me and my P&L on Friday afternoon. That was really awesome, and I'm psyched to go into the week. Awesome. Thanks. Bye.